Today is Thursday, November 19th, and this is a post-market recap for the stock market activities today. And what a day it was. It was flat, muted throughout the day, but we did see a pump by the end of the day, and the indices managed to close in the green. However, the news cycle is moving very rapidly, and we do have important news that took place after hours, and we see the futures declining. So we will cover all the developments that happened today and then some. So stick around for the headlines of the day segment. And here we go. The Dow Industrial Average closing in the green by 44.81 points or 0.15%. The Nasdaq leading the day with 103.11 points or a gain of 0.87%. The S&P 500 in the green, 14.08 points or a gain of 0.39%. And leading the sector's performance today, it is once again energy, followed by technology and consumer cyclicals. Energy for the gold, technology for the silver, consumer cyclicals takes the bronze. What sectors lagged the market today? The notable loser is utilities, the only sector closing in the red today. But we also see basic materials, real estate, industrials lagging the day. Moving on to cover the futures market performance today. And right away, we do see muted action for crude oil today. Moving down to softs, another massive day for coca. We covered the squeeze in coca prices, and the rocket ship here for chocolate goes all the way higher and higher. Muted day for cotton, OJ, with modest gains for coffee, and a big green day for lumber, over 4%, sugar taking another break, down 1% or so. What's going on in metals? We see declines in gold, silver, palladium. However, the gains in platinum continue, and we do see a green rebound for copper. What's going on with meats? Red day across the board. Live cattle, feeder cattle, lean hogs, massive declines today. What's going on with grains? Muted action across the board, but we do see notable declines here for wheat and corn, and notable gains for soybean oil and canola. Moving on to the big casino, the options market, and here we go, the most active names for the day. Number 1, Tesla with 1.2 million contracts. The surge in option trading for Tesla continues to pick up. About 66% of those were calls. Apple at 1 million contracts today, about 70% of those bets were bullish. NIO at number 3 remains a hot name with over 1 million contracts traded today. Over 71% of those bets were for calls, bullish activities. And it is notable that we're seeing Alibaba here coming up at number 5 with over 460,000 contracts. 77% of those were calls. We're all eyeing a rebound, a bottom in Alibaba, and watching that very, very closely. And here are the interesting trades for the day. Starting with the Gilead, and this is the same trader, buying the 57 puts expiring next week and selling the 55 puts also expiring next week, creating a debit spread here on the bearish side for Gilead. The entry cost for this trade is about 5 cents. So any slight movement here to the downside in Gilead and this trade could double or even triple. Notable activities here for Macy's, reported earnings today and down big. They're buying the 8 puts expiration date next week. Again, this is a wild shot costing about 7 cents a piece. We'll see what happens in Macy's next week. Different story for L Brands, also reported earnings but exploding higher in contrast of Macy's. We've been seeing plenty of bullish activities for L Brands even before earnings, so a lot of traders either knew ahead of time that the earnings for L Brands will come out beating expectations, or the sentiment itself was very bullish to begin with. And the sentiment continues here, buying the 45 calls, expiration date December 18th, with expectation that L Brands will climb over 14% by December 18. Another notable trade here for Yelp, buying the 35 calls, expiration date next week, with expectation that the name will climb over 10%. Here is another one, and this is a big one, costing the trader about $250,000 for double FIV F5 networks, buying the 170 calls, expiration date January 15th, with expectations that the name will climb over 6% by that expiration date. And here's another one for Cody, buying the $7 calls, expiration date in December, with expectation that the name will climb over 12%. And I saw this trade being featured on CNBC today, and the trader said perhaps there's another Kardashian deal here for Cody. To me, I'd rather stick with Ulta Beauty. And here is another bet for Sonos, buying the $20 puts, expiration date December 18th. We saw massive gains for Sonos today. This particular trader fading the pop, bidding on 10% or so decline by December 18th. Continuing with interesting trades, we do see here a big call for Square, buying the 210 calls, expiration date next week, expecting the name to climb over 10%. This trade also costing over $250,000. Here is another one for Microsoft, buying the 227.5 calls, expiration date New Year's Eve, with expectation that the name will climb over 7% by then. And here is another big one for Pinterest, buying the $70 calls, expiration date December 4th, with expectation that the name will climb over 6% by then. And the last trade of the day at the bottom of the table, and it is an expensive trade as well, for Tesla. This particular trader going a little higher here, while the expectations buying the 590 calls, expiration date next week. For this trade to be profitable, the trader needs Tesla to close up about 20% or so by next week. So it is a very bold call here, and it could be a Tesla shareholder selling way out of money calls to raise some cash. But either way, if we continue to see the squeeze, the gamma squeeze in Tesla continuing, you could see further gains for the name here, which managed to break above all-time highs today. Did not close there. It closed below it, but it could give it another shot tomorrow and next week. And now, moving on to the headlines that shaped the day, starting with the vaccine pump attempt in the morning. Overnight, we heard from the Oxford AstraZeneca vaccine trial that it produced quote-unquote strong immune system response in older adults. I think the quote was actually robust, whatever that means. And we're expecting final results within weeks for the AstraZeneca vaccine trials. Remember, the AstraZeneca vaccine trials are more significant and important than both Pfizer and Moderna due to the massive size of the participation here. So we continue to wait and see what AstraZeneca will reveal in the next few weeks. The market did not respond to this particular vaccine pump as it did respond to Pfizer and Moderna's vaccine pumps. And perhaps the reason is we do have bad news here. The picture for the economy continues to get worse and worse by the day. We are now seeing an uptick and a reversal in a negative way for the weekly jobless claims. And in this case, we were expecting 710,000 claims and we got 742,000 instead. Still a massive number considering that we are now about 9 months since the pandemic crisis started, and we are still registering over 700,000 people claiming unemployment every single week. And the picture is getting more dire here. According to the US Census Bureau, more than 14 million Americans have little or no confidence that they'll be able to pay next month rent. And the contrast here between the haves and the have-nots could not be any clearer. Here is the picture for the haves. Home sales rise to 14-year high in October. The haves continue to stampede and hoard houses, pushing the prices higher and higher, and perhaps there is a participation of dumb money here. There are two formulas to consider in buying houses. Number one, the mortgage rate. Number two, the home price. What is the point if you're going to stampede to lock in quote-unquote low mortgage rate? Meanwhile, the price of the property from which this mortgage rate is calculated is rising and rising higher in bubble territory. What happens when 8 to 10 years from now, the value of your property actually goes down because you managed to buy the house during a bubble? What good does a low mortgage rate do for you in this case? But the contrast between two Americas here, the haves and the have-nots, could not be any clearer. The haves stampeding to buy homes, the have-nots, a segment of society that is increasing by the day, can't even pay next month's rent. And what is going on in the global economic picture? We do have the IMF downgrading the GDP forecast for 2020, meaning that the recovery is going slower than expected, and we are not seeing V-shaped recovery in the majority of territories hit by COVID-19 crisis. But the most important take from this graph that you're looking at the screen right now is that the United States of America will experience a decline in GDP to the magnitude of 5%. Meanwhile, what's going on in China? China is actually growing back. This is the pivotal point from which China will take over superiority in the global economic picture. You can blame that on the incompetency of U.S. politicians. Moving on to the Federal Reserve, and we do have Federal Reserve President of Dallas, Kaplan. Remember Kaplan with his fancy leather chair? Now he is seeing that we could see negative growth in the fourth quarter of this year, meaning that we're going back to the double dip scenario. And Kaplan is not ruling out that the US economy will quote-unquote slip back into a recession, saying that it is critical that the Fed's emergency programs continue into next year. Pay attention to this one because we do have development after hours regarding this particular point. Furthermore, Kaplan continues that the risks are tilted to the downside. It could not be any clearer here from the comments of Kaplan that the picture is getting more dire by the day for the recovery and for the overall economic picture, meaning that the Fed has failed to rescue the economy and only succeeded to rescue the stock market and the assets of the wealthy. And my question here to President Kaplan, can you guys at the Fed get your shit together? Because we hear Williams being bearish, we hear Kaplan being bearish. On the other hand, the St. Louis Fed president continues to live in a world of his own. Kaplan says the picture is getting dire and we could slip back into a recession and we could see negative growth for the fourth quarter of this year, which I agree with Kaplan here. With no stimulus, forget about a surge in holidays spending. But remember that James Bullard said that we will witness full recovery by the end of the year, saying that it is reachable to experience full economic recovery by Christmas, adding that the recession lasted 2 months and it is over now, and perhaps St. Louis Fed president needs to pass the joint to his colleagues, specifically this perma-bear alarmist Kaplan. He needs to get the memo and become more bullish, perhaps after taking a puff or two from James Bullard's hashish. And by the way, what's going on with the Fed spending here? Take a look at this stunning chart. The Treasury holdings around the world. Before 2020, the majority of US Treasuries were held by Europe, Asia, and other foreign countries. But watch out, wait for it. Here we go, 2020, and the Fed comes from behind, and now they're holding over $4.5 trillion of US Treasuries. We're copying the economic success example from Zimbabwe here. And by the way, what is going on with the market sentiment amidst all of this dire economic picture? Rest assured, the market is at all-time highs, and it is the most overvalued stock market ever from a price to sales ratio. We're not even talking about price to earnings, PE ratio. This is the price to goddamn sales ratio. And we are way above even the dot-com bubble. But hey, buy stocks right here. Let's see how that one will end up for you. And by the way, here is the sentiment. And we are talking about the total leveraged bull to bear ratio. What does that mean? It means leveraged index such as the TQQQs, the SPXL, the UDOW. We are seeing the most extreme bullish sentiment ever in the leveraged ETFs. We're not talking about even the real market here, meaning that the gambling and the mania has reached extreme levels. The SPY, the Qs, the Dow, no, that is boring for the Robin Hoodiots and the gamblers in the market. They're looking for the 3x leveraged index, the TQQQs, etc. And they're going all in, hyper bullish. And speaking of hyper bullish, let's talk about this personality, this creature that we call Tom Lee. And I know a lot of you like Tom Lee because he is bullish on Bitcoin. But take your head out of your ass a little bit and listen to me here. Don't think that Tom Lee is picking your side here. Tom Lee is bullish on everything. Stocks, Bitcoin, lean hogs, horse manure. He's bullish on everything. And Tom Lee pulls this wizardy / trickery. To begin with, Tom Lee is right once a year. And when I say once a year, I mean in Neptune years, which is equivalent of 165 years in planet Earth years. Tom Lee goes on autopilot, saying that the market's gonna go up and it's gonna rally. Market go up, that's it. Now what happens when you keep saying that? The market's gonna go up. Eventually, you'll be right. Because guess what? The indices, the SPY, the Qs, in time, they get rid of bad stocks and they replace them with good stocks, and the indices climb higher over time. This is a no-brainer. So if you keep saying, oh, the market's gonna go up, eventually you'll be right. A broken clock is right twice a day. But how does that make you a genius? This is like looking at ice, telling people, oh, don't worry, bet that this ice will turn into liquid water someday. And guess what happens? Summer hits and that ice turns into liquid water. Oh, Tom Lee performed a miracle. He turned ice into liquid water. No. We know the market's gonna go up over time. This is not a miracle. But they treat this guy as he is the messiah, the know-it-all. However, history shows that Tom Lee has an autopilot policy of saying that stocks would rally, and he is famous for calling the Santa Claus rally every single year. Every single year, he says stocks will go up and will rally all the way to Christmas. And we all know about his famous call during 2018 when he said that we're going to see a Santa Claus rally toward the end of the year. Again, copying and pasting the same prediction he did the year before that, and the year before it, and the year before that. And we all know what happened in 2018. The market actually crashed. But the media treats Tom Lee as the messiah when he calls the obvious. And then when he's wrong, all of a sudden, oh, there was a glitch there with the communication with Neptune. And they give Tom Lee a pass. So please pay attention and stop believing everything that comes out of the mouth of this fraudster. Speaking of fraudsters, let's talk about Tesla and Elon Musk. We heard the news today that Tesla Model S is no longer recommended by the Consumer Reports due to reliability concerns. Now we know that Tesla quality, the production quality of Tesla is going down every single day, and they've been exposed to make last-minute runs to Home Depot to patch up the cars and throw them out just to meet the production quota and the expectations. And in this case, they say that Tesla Model S problems include its air, suspension, and main computer and the touchscreen control. And the only Tesla model that is recommended by the publication is the Model 3. Anything else is garbage from Tesla. Model 3 remains their best vehicle, and they pour all of the attention on this particular model. And by the way, did you know that the recent run in Tesla shares after announcing that they would be included in the S&P 500 made Elon Musk very close to becoming the second richest man in the planet, defeating Bill Gates. Remember that Tesla only made 24 billion bucks in revenue, but Elon Musk's net worth is equivalent to almost 4 times the revenue the entire company produced last year. And now Tesla is becoming very close of surpassing the valuation of Berkshire Hathaway. Good entry price, bro. And by the way, the richest, or the second richest man in the planet, I should say, Elon Musk, Reverend Elon, is hiring a lot of people, but he is hiring them as part-time employees, because if he does hire them as full-time employees, he has to buy laptops for them. So Elon cutting corners in his car productions. Remember that he forgot to pay the water bill in one of his factories. And now we find out that he is too cheap to buy laptops for his employees. We still love you, Reverend Elon. Kind of. Not really. Oh, and by the way, did you notice that the market almost had a red day today? That is not acceptable by our beloved politicians. Regular people can struggle to pay the rent, they could lose their jobs, they could wait hours and hours in food banks lines. That is alright, but if Wall Street experienced just a little bit of pain, that is not acceptable. And today we almost had a red day, and here comes stimulus optimism to the rescue. And we heard from Chuck Chucky, saying that McConnell has agreed to resume negotiations over COVID-19 stimulus. McConnell agreed from the beginning. He just agreed to 500 billion bucks. He's not going to agree to more than that. And we saw the indices, regardless of the logic here, climbing higher and closing in the green. However, hold your horses. Here is a little bit of whiplash, because after hours, we heard from President-elect Joe Biden saying that we will learn his Treasury Secretary choice very, very soon. But he said that the choice will appeal to both spectrums of the party, meaning the moderate Democrats and the progressive/Bernie Democrats, meaning that the market will become a little bit worried about the choice for the Treasury Secretary. The market assumed the kosher choice of Janet Yellen, and certainly the market will be very happy if Janet Yellen becomes the next Treasury Secretary, because she is from the Burr Club. What is the Burr Club? The print, and when you're done printing, print once again, and when you're done printing, print once again. But perhaps she's not going to be the choice that would appeal to the Bernie crowd. So that put the market on edge after hours. But perhaps the most important development that happened after the bill is the current Secretary of Treasury, Steven "Slimy" Mnuchin. He decided to jam the Fed's printer, and he declined to extend several emergency loan programs. One of them is the corporate credit facility that was juicing the stock market. So all of these programs will expire December 31st, even though the Fed wants to print more and wants to extend the programs beyond December 31st. So Mnuchin here is throwing a surprise jab into Jerome Powell's face and putting a temporary hold to the supply of cocaine to the stock market. And right away, you saw stocks after hours declining and responding negatively to this piece of news. And if this was not enough, we also heard from the governor of California, the disastrous governor of California that ruined the entire state, Gavin Newsom. And he is issuing a curfew starting this Saturday from 10 p.m. to 5 a.m. And he says together we can flatten the curve once again. But remember that Gavin got caught a few days ago attending a birthday party with one of his lobbyists, and it was a massive party in terms of attendance in the midst of the COVID-19 crisis. So he is issuing rules for us, but he and his cronies abide by different rules. Not even masks were worn during that party. But regardless, this is bad news for the market, the largest state in the country closing shop, but I know what the market is going to think. Initially, it would be received as negative news, and then the thinking would go, but bad news is good news. And worse news is even better news. Because now, with all these closures in New York, California, perhaps we're going to see Texas next, since people are dropping like flies in Texas. That would be actually very good because it will motivate the government and the Fed to issue more supply of cocaine. Moving on to the heat map analysis, and let's see what's going on here. Right away in the tech sector, we do see a massive rebound for the software names. CRM, Team, Intuit, even DocuSign, ServiceNow, Workday. Even though Workday reported earnings after the bell, and the name was trading higher, and then during the conference call from Workday, the stock reversed lower after hours last time I checked. So perhaps the gains for the software sector here will only be a one-day thing if we do see continuation of the pain for Workday tomorrow. What's going on in semiconductors? Taiwan is muted, Nvidia muted after its own earnings, but we do see AMD moving higher. AMD been muted, not doing anything the last few days and weeks, and now we're seeing more activities in the options market regarding AMD. And what's going on with communication services? Right away, we see the big boxes of Google and Facebook. Google continues to outperform the rest of the big box technology names. Declines for AT&T here. Notable declines for Disney, 1.5%. But we do see a rebound in Snapchat and the video games names. Activision just a little bit, but big gains for Electronic Arts, Take-Two, and the ticker BLU. We also seen a lot of bullish activities in the options market regarding this particular name. What's going on in consumer cyclicals? Here we go. Alibaba finally having a green day, closing about 1.6%. We will see if these gains are sustainable or not. Remember the level of 266. We want to see Alibaba closing above 266 before I become interested in buying the name. They reported earnings a couple of weeks ago. The earnings were very good. I like them, but I'm also worried about the Chinese government hammering Alibaba and Jack Ma in particular. Big gains for Wayfair, eBay, and Tesla. We know the story here, but you see the General Motors and Honda. We talked about Honda yesterday. Toyota, Ford, all muted today. A rebound for Lowe's here on Home Depot, and a decline to the downside for the apparel names after Macy's reported earnings. We see TJ Maxx declining 1% or so. The name popped after earnings, and now it is giving some of those gains due to profit taking. Casinos gaining on the day, but we do see mixed picture for cruises and hotels. Marriott in the green, Hilton in the red. And what's going on here with consumer defensives? Target, another day of gains. Target remains the best name in the big box stores. But we also see the biggest name in the big box stores, Walmart, rebounding today and gaining over 2% or so. But again, another muted day for Procter & Gamble, Clorox experiencing another day of pain, and Estee Lauder, another one, a big hit on the chin. Speaking of hits on the chin, check out Tyson, another day, another red day, another decline for Tyson. Tyson been declining for days now. But we do see a big uptick in the grocery section. Right away, you see at the bottom of the box there, the bottom right, you see groceries lighting green due to Kroger's stock gaining about 2% or so on the day. Kroger remains one of my largest holdings, and I thank the genius analysts who've been downgrading the name for the last few months, giving me an opportunity to add to my Kroger holdings cheaper and cheaper. Buffett added last quarter. I added on the dip as well. And the reasoning behind the downgrades for Kroger from analysts is that the quote-unquote momentum is fading from Kroger. First of all, they're talking about it as if it was a tech name. It is not a tech name. It is a grocery store. We're still in the pandemic. The shelves are emptying. The demand for Kroger services and home delivery is surging once again. What do we see in rates here? We saw Crown Castle gaining big today, or yesterday rather. Today, it's giving up some of those gains, down 1.5% or so. The hospital rates gaining today, notably Welltower, gaining about 2% or so on the day. But the biggest gainer, of course, remains Simon Property, gaining over 5% or so on the day. What's going on with the utilities? The laggard of the day. Another day, another pain for Dominion Energy. A slight, very baby rebound for American Waters. But we do see declines here for names for Next Era Energy all the way to American Electric Power, Eversource, all experiencing declines of 1 to 2% apiece. And what's going on with basic materials? Gold miners, another day, another resumption of the pain. Barrick Gold down 1% or so. Newmont did a little better, down about 0.20%. But we do see notable declines for Wheaton and AAM. What about copper? Copper gaining for the day. You saw the futures and we see another day of 2% or so of gains for Freeport-McMoRan. Moving on to energy, the leader of the day. What do we see here? Gains for Chevron, Exxon, although the majority of the gains came from the gas names such as Kinder Morgan, Enterprise Products, Energy Transfer, and we saw Phillips, the ticker PSXP, up big today, over 7% or so. Pioneer Natural Resources, PXD, also up big today, over 2% or so. What's going on with industrials? Boeing rebounding just a little bit today, but we do see a lot of pain for General Dynamics, down over 2%. But the contrast here with Raytheon, up over 2% today. Raytheon declined significantly the last few weeks. It's been rebounding, catching a bid from the bottom. Muted action overall for industrials, but we did see declines for both UPS and FedEx. What's going on with the healthcare sector? Eli Lilly is the gainer of the day, gaining over 2%. The decliners led by healthcare plans. United Health down 2% or so. Anthem over 3%, Cigna 3% in the downside, Humana similar story, a lot of profit taking here for the healthcare insurers. Pharmacies similar story, declines for Walgreens, CVS, and we did see a down day for medical distributors led by McKesson. But we also did see overperformance here from Abbott Laboratories and Zoetis, the ticker ZTS, for the pet healthcare drug manufacturer. What's going on with financials? Muted day for JP Morgan, Bank of America, but we did see big gains for Citibank, and check this name out, Wells Fargo, gaining about 4% or so on the day, right after Warren Buffett dumped the name. Muted action for credit services, Visa, MasterCard, American Express, PayPal, all muted. Goldman Sachs, Morgan Stanley, similar story. I'd love to see declines in Morgan Stanley because I want to add the name to my portfolio. Moving on to the rotation trade, and again, it is a muted day. We're not seeing very significant gains or declines one way or the other, with exception, of course, to Tesla and Shopify. Shopify been rebounding once again. Other than that, the gains are pretty modest here. It shows a little bit of indecisiveness in the market running out of steam. Of course, tomorrow is going to be a very important day of how we will react to the news that the Treasury decided to kneecap the Federal Reserve and stop the supply of cocaine to the market. Moving on to the charts analysis. Starting with the SPY, we did gap lower in the beginning of the day, and we did trade flat pretty much all the way till we heard the stimulus pump around 11 o'clock Pacific time. The indices climbed higher, and looking at the chart without paying attention to the news whatsoever, the rational conclusion here is that the resistance of 359 will act as a magnet to pull the chart all the way there to face the resistance, and we will see whether it will defeat the resistance or not. But given the fact that we have negative news after the bell, we could see the SPY gapping lower and revisiting the support line of 353.25 instead. Remember, today was another low volume day. You cannot make a definitive conclusion one way or the other by just looking at the charts. And here is the daily chart of the SPY. Remember, looking at the MACD from a daily perspective, we are seeing curling down, weakness about to cross the blue line average, creating negative red impressions in the histogram. Every time that happened the last few months, we saw declines in the SPY. Furthermore, we have very hard rejection lines, what I would call a no-pass zone. No-pass zone number 1 is the upper limit of the reversal candle from yesterday, and the ultimate no-pass zone is the upper limit of the big reversal candle from last week. The SPY will need a lot of momentum to defeat these two no-pass zones. What do I mean by momentum? Players on the sidelines joining. We've seen an explosion of the volume to the upside. If that doesn't happen, the trajectory will be negative. And remember, we have a shorter trading week next week due to the Thanksgiving holiday here in the US. So a lot of the action will take place tomorrow, and we are likely to see muted trading activities next week. So tomorrow will be a very, very important day, and perhaps we will see a lot of traders not willing to carry the risk of holding all the way to next week. Keep that in mind. Moving on to the cues. What do we see in the technology sector? Here is a 15 minutes chart. The good news is that we managed to climb back the resistance level of 292, making it support after breaking above it. The bad news is we are still in a bear flag formation, negative wedge formation, whatever you want to call it. It is basically a big decline on higher volume and then a rebound on lower volume, which suggests a resumption of the primary move to the downside. That's all there is. You can call it bear flag. All these names mean nothing without technical and psychological explanations. Again, if I did not hear the news after the bell, I would have said that we could see a green day for the cues tomorrow. But the news after hours change a lot of the calculation here. What do we see from a daily perspective? The bulls would argue that we have witnessed a bullish engulfing candle today. What does that mean? We gapped lower in the morning, but we managed to close above yesterday's open, suggesting strength and momentum in the dip buying in the cues. But here's what the bears say. Oh, hold your horses. We did see a bear flag. We cracked below it, and we will see a resumption of the second act of the bear flag, which is a leg of decline lower. And today's activities pretty much mean nothing when you look at the primary move of the bear flag. Moving on to the TLT. This is a 15 minutes chart. Remember the three conditions I gave you for the reversal. Number 1, a reversal higher to the TLT. Number 2, the VIX recapturing 24.8, closing well above it. Number 3, a reversal for Apple from the 120 level. We're now seeing the first condition close to being fulfilled. There is a momentum in the movement in the TLT and the appetite to buy bonds. Perhaps some smart money is selling stocks, moving to the safety of bonds, at least in the temporary fashion. Today we saw another gap higher day for the TLT, and I would love to see the TLT climbing and gapping up higher again tomorrow. That would be definitive reversal for the course of the TLT. What do we see in the TNX? And this is why we're still patient. We see a bull flag formation, which is supposed to result in a pop higher for yields and going on to meet the very important psychological level of 1%. But this bull flag is starting to melt down here, and tomorrow is a very critical day. It is a put up or shut up for yields. Either we're going to see the explosion higher and the second formation of the bull flag, the leg higher, or we're going to see a decline and the bull flag will go out of the window. Tomorrow, very critical day technical wise, not just because of the TNX, but we also have the VIX. The VIX struggling to break above 24.8. It reached very close to it today, but it reversed and closed lower. The VIX needs to pop higher tomorrow. It is put up or shut up day. It needs to break above 24.8 and close above it. Otherwise, I'm seeing a lot of weakness here for the VIX and a lack of appetite to buy protection. I'm still giving the VIX the benefit of the doubt. We see a curling to the upward destination in the MACD indicator. And for me, tomorrow is a very critical day for the VIX technical wise. No notable activities here for the dollar index or gold, so we will skip both charts. Even though the dollar index managed to pop higher in the morning, then reversing lower, closing pretty much flat. But here's a 15 minutes chart for Apple. We caught support today From which level? 117. And as long as Apple is trading in the range between 117 and 120, we're not seeing a harsh rejection from 120, because so long if the chart is above 117, 117 acts as a launching pad to try and crack 120 once again. If you're a bear and if you're looking for a reversal in the stock market, specifically the Nasdaq, you want to see Apple flushing down, failing to catch the support of 117 and closing well below it. That would put the 120 out of reach and will be considered as harsh rejection. Moving on to Tesla. The squeeze continues in Tesla. We managed to reach all-time highs, but we closed below it. What do we need to see here for Tesla? Perhaps we're going to see a red day tomorrow, going back to the trend line, retesting it, and then bouncing higher. That would be the healthy way for Tesla. Bouncing from the trend line, retesting it as support, and then marching higher to close at all-time highs. Not necessarily this week, but perhaps the upcoming weeks. And remember, the weekly close is very important for Tesla here. What you don't want to see is a reversal and a close below the trend line. That would equal a weekly close below the trend line, and that would put the scenario of the double top, which is a bearish formation, on the table. So again, another critical day technical wise for Tesla tomorrow. Tomorrow is a very important day from a technical perspective. For the indices, for the yields, for the VIX, for Tesla, Apple, it could not be more important than tomorrow. And remember, it happens to be OPEX day, options expiration day. I predict that a lot of activities and a lot of action will take place tomorrow. And that leads me to the conclusion of this video. The mysterious entity been popping the market day after day overnight, hoping that retail traders will pick up the tab and take it from there. Retail traders still showing weakness here and a lack of appetite to participate and pull the market to the upside. And after hours today, we've heard perhaps the most negative news we've heard regarding the market in a while. The market been riding higher, ignoring the decline and the worsening of the macro and microeconomic picture and the rise of the cases in the virus, because the Fed will always have our back. Well, now we have the news that the Treasury decided to kneecap the Fed and put a halt to the flow of the credit facilities. Right away, that negates the excuse for traders or market participants to ignore the reality. Furthermore, we have a shorter trading week next week due to the Thanksgiving holiday. So tomorrow, we will see a day not only important from a technical perspective, but from a decision-making perspective. How will traders receive the news that we heard after the bill? How will they react so they don't have to worry about trading and holding risk during Thanksgiving week? I project a spike in volume tomorrow and very heated battle of activities. So buckle your seatbelt and let's prepare for action tomorrow.
If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.